I think there are two aspects to it. First, the fact that you have large element of grants and very cheap loans, cheaper than Italy could raise on the market, it means the Italian debt sustainability would improve compared to the situation where you don't have this. So I think that by itself is an incredibly important move for Europe and significant for Italy. I think the second aspect you say is also important. How will this money be spent will determine to a large extent what the economic impact would be, what kind of growth stimulus Italy will receive. I think our view has been some of the announced priorities of the EU are very much spot on. For example, spending for medium-term investment, particularly in green area. These are areas which should boost not just the short-term growth, but also the long-term growth. But of course, we don't yet have all the details. Each country is supposed to come up with its implementation plan and with the priorities. The Commission is giving an overall guidance in terms of what they should do, but we don't yet know the details. I think in the next month or two, we will see what the governments actually want to do. We have had one example of this. The French government has announced its plan. It has taken the recovery fund money and it has added to it. France receives about 40 billion. It has added another 60 billion to it. It has a package for 100 billion, and it is specifying where it will be spending it. So I think we need to see that degree of specificity from countries like Italy to understand what the exact economic impact would be.
Reza, the digital tax is getting interesting now because clearly we've had that sell-off on Wall Street and there could be implications for the major FANG stocks if there is some global accord on a digital tax at the OECD level. But the Europeans now saying if you don't get that happening this year, we're going to aggressively push forward with it next year, which then, of course, brings into context, is it going to be Trump or Biden in the White House, and what could any retaliation be like from the Americans? Just give us a sense of what you think of the appetite in Europe at this stage to drive home that digital tax.
I think, first of all, the digital tax is one of the elements to essentially pay for the recovery fund in the long run. Now, I think the first factor from a purely economic point of view, interest rates are extremely low at the moment, and average interest rates are frankly close to zero. And the recovery fund money is the bonds that will be issued will be medium long-term bonds. They will not be coming due for at least another 7-8 years, the very first ones, and they go for over 30 years. So in that sense, there is no urgency for repayment of the recovery fund money. So they have specified a number of areas where they are looking into taxation to pay at least for the interest cost. That interest cost is very small, and it comes. The interest cost comes soon. The capital cost doesn't come for quite a long time, so they don't actually need to raise that much money in order to finance the recovery fund through common taxation. So I think, as you said, there is appetite in Europe. There is a perception that the digital part of the economy needs to contribute more to the finance ministry's needs in this period. This has been an issue which is not new. It was there before the COVID crisis. So I think the Europeans are determined to make progress in this area, but it is really not essential or urgent when it comes to recovery fund repayments.